Hello everyone, welcome back to Laptop Trader channel on YouTube. My name is Philip. I'll be hosting this month's presentation. I'm here to share my trading experiences and give back to the stock trading community one video at a time. I hope you're well enjoying this warmer summer weather, and may you have a happy 4th of July and enjoy your freedoms. Our monthly videos cover the markets, stocks, ETFs, stages, technicals, fundamentals, market cycles, trade entry, trade management, trade exits, and how to create the confidence by putting the odds in your favor. Good luck to you. And my email contact if you have questions is laptoptraderphil@gmail.com. Caution, this video is for information only and should not be considered investing advice. Trade at your own risk. Most stock traders lose money. Please protect yourself at all times. So, where do we start? Well, start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets, just like any other profession. So, we've got our July agenda. So I'll just go over what is new in the stock market since our last video in June. Are we bullish or bearish? What to do when there are too many opportunities for trading. So right now there are quite a few opportunities and there's actually too many. We'll have a continued discussion on trade entry tactics. When is the right time to enter a trade and why I prefer to buy strength after a move up and or after a period of consolidation and tighter pricing. How to take a free ride after your stock shows a profit. What is a free ride? So we'll clearly define that for you, and it's definitely a tactic that I like to use. So let's start out with the markets. So we'll just go top down. So overall, the market is in a bullish trend here since April, going up. Then we consolidated, and then we moved up last week, and this week we closed with a new 52-week high in the market. It's basically the same picture for the NASDAQ market, new high breakout last week, new high this week, up since April. So basically the same picture there. The Russell 2000 small cap stocks have also been in an uptrend since April. We have not made a new 52-week high, but this market is headed in the right direction, which it generally does follow the larger markets, not always. Same picture with the Dow Industrials. We've been up since April. We had a breakout last week, and now we've moved up again this week. We are approaching 52-week highs in that market in the industrials. And then the transportation average, again, same picture. Moved up since April, went sideways, and now last 2 weeks has again moved up. We haven't made a new 52-week high, but also headed in the right direction. So overall bullish, right? So you would expect most stocks to be also trending that way. So here would be an example of Uber Technologies, which is also in a bullish trend since April. It went sideways for quite a long time. Last week made a new 52-week high, and then this week closed at or near the high. So bullish on Uber, just to give you an example. So what do we do if we are in a bullish environment or a bull market and there are actually too many opportunities? Because we all have a limited supply of capital. How can we sort out the market for the best opportunities for our trading plan? So I like to focus on the strongest areas of the market and then look for ideas inside of those industries. We can do that with a platform using search criteria or with a screening tool. One example would be stocks making new highs or new 52-week highs. Another would be a percentage price change and or sort by the largest to the smallest. One screen I also use is ranked by industry performance, and within that search, it shows the sector's top 100 stocks by ranking in performance, either by month or months or 52 weeks, etc. Industry groups are within the main 11 stock sectors, and there are over 100 groups. So it is a quick way to get to some stocks that are moving higher now very quickly. We can also use a sector or industry heat map. It's the same information, with a different view of that information. And so just so you know, during this video, it took me way longer to make this video than it did to find some new trading ideas. So with a platform, you can quickly get to where you need to be. So on my platform, Bar Chart Premier, I just go to this tab, Stocks. I can go to these different pre-populated screens. There's a stock market overview. There's top 100 stocks, new price surprises, new highs and lows, etc. We can look for volume leaders. We can look for pre or post market ideas. There's also new recommendations over here, top stocks to own. I generally like to come over here to this sectors area, and I'll use these three industry areas to find some good quality opportunities. So I'll look at either industry rankings or the heat map, or I can look at industry performance. But these are all pretty nice pre-populated screeners that you don't have to create for yourself. You can create a screen for yourself right here using the stock screener, but I found that it's just easier for me to go about it in this way. So once we've selected where we want to go, if I selected stock market overview, that's what I would get, a stock market overview for that day. Okay, showing the general overview of the markets, some market leaders, a couple of ideas here on new 52-week new highs and lows. Okay, so right there, after a couple clicks, we've already got some ideas right here. A lot of times you get a lot of these biotechs. I personally don't like to trade biotech because they can go up and they can go down pretty quick. They generally don't make any money, but if that's your thing, those are always available. So again, I will usually go to the right side of the screen. Here I would go to like industry performance or industry rankings. And what do we get? We get a 1 month industry performance. So within that search, you can see we've got the sector's top 100 stocks. Then below that, we've got wireless equipment. Then retail with or wholesale, auto and trucks, retail home furnishings, oil, refining and marketing, electronics, solar, auto, and etc. So this list would just keep going down in descending order based on a 1 month change. Okay, so that's one area to start. You could also go to the heat map. It's the same information, it's just information in a different format in a heat map view. So here, it's the same thing, just 1 month performance. You would read the heat map from the top left, and you would read left to right, and then, this would be the top sector or industry, and then from there, according to the search over the last 1 month period, you would then go down as far as performance is concerned. So that's a very easy way to find some performing stocks. You could also use a 52-week performance, which many investors prefer. And you can see on the top left, over 52 weeks, wireless equipment is in the top left, followed by sector's top 100 stocks, then computer networks, etc. Again, reading left to right and going down. So that is a fairly quick search to find some stocks that are performing. I personally kind of like the sector's top 100 stocks, and let's take a look there. We can also look at industry group rankings. This sort is sorted by what's called weighted alpha, and that definition is a measure of how much a stock has risen or fallen over a 1-year period, with a higher weighting for recent pricing activity. So what we see on that is, again, we've got the sector's top 100 stocks. Below that, we have mining and gold, wireless equipment, aerospace, finance, banks, etc. And so, if said, a lot of times I would just click on this first one to see if we can find any trading opportunities. And when I click on that, this is the list that pops up. So right on top, we've got Power Solutions. Some of these companies you may or may not recognize. Roma Green Finance, Dave, I recognize. CommScope Holding Company, Quantum Computing, I recognize. Verona Pharma, Tecogen, Eva Technologies, Gorilla Technology, and Collective Mining. So I only recognize a few of these companies, which doesn't matter. But again, this is going to be sorted. This list, this search is going to be sorted by weighted alpha. So it's giving a highest weighted alpha to this company here at this time. So then I just move on. This is another definition for this 52-week % change over here. is the difference between the current price and the settlement price from 1 year ago expressed as a percentage. And we can see that this stock on the top is up over 684% over that 52-week period. So that's a pretty good opportunity, right? Well, because this list is sorted by alpha, it will list other stocks here that have actually performed on a percentage basis better over last year, but they'll be lower on the list. So here's one, QUBT Quantum Computing, over last year has went up over 4,000%. So there's some really good opportunities within these lists if you pay attention to them. Okay, now let's discuss why is a stock making new daily highs or new 52-week highs such a powerful indication for a stock to continue moving higher. Why would we buy new highs? To some people that makes no sense, because we're taught pretty much through advertising, media, and most likely our parents too, that we should be looking for lower prices. We should be looking to save money. We should be looking for bargains. So the stock market is reverse of that. We're looking for an investment. We're looking for something to go up in value. And so that can be a mind change for many of you, looking for bargains in the stock market and you're not having any success because you're buying weak stocks, not making new highs. So that is the answer to that. But another short answer is supply and demand. Okay, we're not buying groceries. We're not buying, stuff for our house that we're looking for on sale. We're looking for supply and demand. If there's more demand than there is supply and buyers want to buy that stock for whatever reason, those reasons could be earnings, growth, it could be a new industry, it could be a hot topic at the time such as quantum computing, or even some news event affecting that company or industry. So let's say some news came out about Tesla and or electric vehicles that could affect that industry. So another reason is that the average buyer that bought is not holding a loss. They're holding a winner. And most buyers are holding a profit or an open gain in that company. So when all or most buyers have an open gain, regardless of news or earnings, there is simply not a compelling reason to sell at this time. The buyers are in control. Remember, most investors are not traders. They tend to buy and hold for longer periods of time. There is no reason to sell a stock making new 52-week highs other than to take profits or reduce exposure to that stock or company, or if you have information saying future performance may decline. If you have a big winner, then that winner can in fact take over your portfolio over time, and most money managers will try to keep that from becoming a problem by selling some of that position and diversifying your money into other names. But stocks making new highs are generally held onto. So this is why it's such a powerful thing to consider, stocks making new 52-week highs, because everybody is in a winning position. So let's take a look at that stock that was on the top of our sort, Power Solutions International Common Stock, I believe. Symbol PSIX. Now as we look at this, we can see this stock has had a big run up since April and May. I would certainly not encourage you to buy into this stock at this time. It's really extended at this time. So this is just an example. This is certainly not a trade recommendation or a suggestion, but this is just an example we can use to kind of hone our skills. Okay, so this is just a basic overview of the stock. They recommend it's a strong buy. I would say be careful because it's so extended at this time. Now we can also look at some information about the company. On the right of the chart, there's a button that says more data. So we can push that button and we'll get some more data about the company. What do they do? What industry are they a part of? And we can read through that and decide for ourselves, well, does that make sense? Is that something that I would wish to invest in? And this is just a company that's engaged in producing and distributing power solutions for manufacturers of off-highway industrial equipment in the United States. That's their business. Okay? And if we go along the bottom of this window that opens, then we can go from profile to per share performance to ratios, and I will look at some of these and I'll say, okay, all these ratios look pretty good to me, and I'll just put, check, return on equity is very high, return on assets is very good, profit margins are great, they don't have debt, price to sales is not out of control, price divided by cash flow is pretty good, so I just go check, okay, and these quick ratios, these quick fundamentals tell me essentially, is this company overvalued, undervalued, or something in between? So this in this case, everything looks to me to be pretty good and a very good return on equity. Then we can look at some other information. If we click on the performance tab, opens up a different window and we can see 1, 3, and 6 month performance. We can also see 1, 3, and 5 year performance, and you can see this stock has had some really good performance over the past 5 years. Okay, that just says, hey, we're looking to buy into a name that's performing. We're not looking for bargains. We're not looking for something that's on sale really at this time. Now here's another page I will use. If we click on the key stats, it will open up some key stats. How big the company is, how many shares outstanding they are, what's their annual sales, what's their annual net income, what's their last quarter sales, what's their last quarter net income. I like to use these sales numbers to judge going forward, are quarterly sales really starting to grow, or are they kind of in line with these annual numbers? So that is something that I look at. For example, if last quarter net income here was 19 million. Annual net income is just under 70 million. So I'm thinking to myself, okay, that's pretty good. That's pretty much in line with that number. So we're not losing income. We're staying in line with that. Even better if this was like 30 million or 40 million last quarter net income. The more the better there. That would indicate we're really continuing to push forward and grow. Okay. One number here that stuck out to me was 5 years earnings growth of 124%. So triple digits earnings growth, that's great. I don't really trust this number, this minus 12% 5-year revenue growth. I have a hard time believing that that's an accurate number. That's why I put the question mark there. So that could, initiate maybe some more homework. Should I actually look at the company's balance sheet if I was so inclined to? I'm not inclined to because I basically trade off the charts for the most part. One other thing I will look at, and you could do this for yourselves, is plot the earnings over maybe the last 2 or 3 year period and how are earnings growing. Okay, so let me just read through this and why I do this. More value is given to future earnings than to current earnings. An earnings report is like a report card. It reports what's happened in the past. Also, growth in year-over-year earnings, sometimes listed as YOY, is very important to the market. We can see here more than double the year-over-year earnings per share, providing a catalyst for an increase in the value per share of the stock. What does that mean? Well, all the way here, almost 2 years ago, we had 28 cents earnings per share. If we fast forward 4 quarters, what do we get? We get 72 cents per share. So that's more than double. And when we compare year over year earnings, right? So now if we go to this next quarter, we had earnings growth from quarter to quarter from 28 cents to 39 cents per share, okay? If we look ahead a year, we can see that's 75 cents. Again, almost double what it was a year earlier. That's very strong earnings growth when earnings are doubling like that. And that trend continues here, 34 to 103, 31 to 83. So this is a company that's growing their bottom line. They're growing their earnings per share. And that was a catalyst for people to get interested, for investors to get interested. You can see the volume. Look at the volume. There's almost no volume over here. And all of a sudden, volume ticked up in a big way. And then price also moved up in a big way. And I believe these earnings per share were a catalyst for that move. So we've had a strong move up since April 2025, along with the market moving up. Relative strength in this company up over 200% in the same time frame. So if I'm looking for, let's go down in time frame from a weekly chart, which this is a weekly chart, to a daily chart to look for an entry opportunity. Also note growing earnings per share, growth in volume and interest. Remember, Wall Street's main thing they're looking for is growth. That's the number one word on Wall Street. So let's talk about now, if we look for an advantageous entry on that company as our example, let's talk about what is a free ride trade before we do that. So a free ride is any trade that you can raise your stop loss to break even or higher so that if you were stopped out, you would not lose money. Example, if I entered a stock at $25 per share and my stop was at 24, and if price moved up to 27 and I raised my stop to 25, I would have in theory a risk-free trade or a free ride, okay? Caution, stocks can and do gap up and down, and if price gaps down overnight or even intraday below your stop, you would still have a loss of capital if you were stopped out, okay? So that's just a caution on using stop losses. Now, also, any trade that you can raise your stop loss to break even or higher and you take a partial profit when price moves up to a level, you can sell some of your shares. By selling some of your shares, which I will generally sell a third or half of my shares, depending on the strength of the move and where the trend is at on the chart, I would have a free ride on my remaining shares. By doing this, you further reduce your risk by reducing your position size, and you put some money back into your account, and you are still open to any further upside potential in the stock price with your stop at break even or higher. Again, gap risk still applies. So why is a free ride trade or position advantageous or desirable? Well, it's pretty obvious, but anytime we can reduce risk and put ourselves in a position to win, that is a good thing. It reduces stress and makes trading easier. By selling partial positions and or raising our stops, we can lock in gains or profits and hold the remaining position for a lot longer and ride the inevitable ups and downs of the market. So this gives us a chance to hold on for the big moves. Currently, I hold 6 out of my 12 positions as free ride trades. So this is a tactic I use all the time. My largest gain is a quarter lot in symbol QUBT with an open gain of over 87%. So what is my reason to sell at this time? Look at the chart. My stop loss is higher than my entry because of the nice gain. I can ride out any pullback, okay? I really believe in using this free ride concept to take stress out of my trading. So if we look at the math on selling all or half of the position for a free ride trade. Anyway, risk based on the stop using the low of the day would give me a $2.30 per share risk, okay? If, using our example, in this company we had a $10.80 per share gain in 2 days, we would be up 4.7 times our risk or up 4.7 R, okay? If we sold 10 shares, if we sold all of our 10 shares, let's say we had a position of 10 shares and we sold all of those shares, we'd have a $108 profit or a 16% return on investment. We would have $673 invested. So that's just basic math. If we had the same 10 shares, and we sold half and we hold the rest, we would still have a $54 profit or gain, and we could raise our stop to break even to try to get any more gains. And we would still profit of over 2R. We had met or exceeded our goal of 2R, and we could hold shares for any potential future gain or loss. So many times what I do is I'll set my initial target at over 2R. I'm always looking to double my money or double my risk. And in this case, because we had such a nice gain in 2 days, we're actually up over 4.7R. Now, let's say you had a larger position. So this would be for a small account. Let's say you had a bigger account and you had 100 shares, okay? If you sold all of your shares, you would have a 1,080 profit. Same 16% return on investment, but this time you would have 6730 invested. If you had the same 100 shares and you sold half and you held the rest, you would still have a $540 gain, and you could raise your stop to break even. So you'll have the same profit ratio of 2.34R if you sold half, and you could hold for any potential future gain or loss by raising your stop to break even or higher. Note, this was a swing trade, not a day trade, and therefore the pattern day trading rule does not apply. So this was a nice trade for an account size under $25,000 in capital. If you don't understand that rule, you can look that up for yourself. Also note, we did not pick the bottom of the price chart, and we waited for an advantageous entry opportunity. So there's no need to be perfect in trading. You're going to have, you're going to miss perfect entries, but it's definitely a skill that you can work on over time. So this is just kind of the math of selling half. And if you have even a larger account, maybe you could do 1,000 shares or 2,000 shares or whatever your account size is, but ratios and the returns would be the same, okay? So next, let's look at the chart of this example of Power Solutions, symbol PSIX. So in this example, I would have entered on June 30th over the previous day's high of 67.24. So let's say I got filled a little bit late. I entered at 67.30. Stock closes the next day at 78.10. So you're up from one day to the next day's close. You're up 10.80 per share. Up 16% in basically one day. And that entry would have been all the way over here on this breakout candle and breakout bar, making a new high volume. Okay. So we didn't pick the bottom. We didn't get a great entry over here. We didn't enter here, which we could have. We didn't enter here, which we could have. We didn't enter here. I'm saying this is in the future. This is after all this has taken place because this stock is so strong. It keeps making new 52-week highs. And so it looked like a decent trading opportunity. Again, this is a short-term trade. This is a swing trade. This is not buy and hold. But here is some numbers for you. Enter at 67.30 here. Stop 65, which would have been below the low of the day of 65.13, giving us a stop loss per share of $2.30. Our target, our 2-to-1 target would have been 71.90, right? 230 times 2 added to our entry is 71.90, so we blew past that target. And then up by the end of the day, 4.7R or over 16%. So pretty decent swing trade there. And if you sold all, that's fine. If you want to sell half and see if the stock continues higher, that would put you in a better position to win or to hold on to your gains. But here's another idea. Here's quantum computing, symbol QUBT. Remember, this came up on that list as it's, I believe it was up over 4,000% or something like that. But so this is a case where this is a new industry, a new company. It doesn't have a profit yet. So it's a new industry. Quantum computing, new company. But you can see on the bottom here, there's a long period where there's no interest. There's just apathy. Nobody cares. There's no volume. Earnings are probably negative, right? But then investors got excited, and you can see the volume start to creep up, and then volume spikes. And as volume spikes, interest increases after this long period of apathy or no interest. You can see the price spikes up, okay? So we went from a period of contraction or prices not moving to a period of expansion. Price and volume expanded. Now that we have some evidence that this is a desirable company, now we can look for an entry in an area of lower volume and tighter prices. So an advantageous entry, a great point to enter, a low risk entry point. So, I'm not going to buy up here, even though that's a new 52-week high, because the size of that candle, that's just too big. I'm not going to buy that. And I'm not going to buy this pullback because that's another large candle. So we're going to let price settle down. I chose to enter this company over here in this area, right here. After price calmed down, after it came down, then moved up a little bit, and then we made this higher low. So I started looking for advantageous entry in this area. After volume kind of went down, the volatility contracted. Price contracted, volume contracted, volatility contracted. And after I entered here, price began to expand again. Also, interest came back into the stock, volume came back into the stock, and therefore pushed prices higher. So I have a advantageous entry on this company. Here is the daily chart. That was the weekly chart. In this case, this company does not have earnings, so I took 2 starter position entries, and I have an average cost of 11.26. Okay, so those 2 entries were here in May and here later on in May again. So I entered here and I entered here. What are some clues as to this stock may go up? Well, at the left, there was a nice move up here into earnings and then a price contraction and a volume contraction. Look at the volume contract, okay? Look at price contract and get tight. And that happened after earnings. So this tells me that this stock is most likely under accumulation. It's becoming desirable. And we also had evidence from the weekly chart that it's also a desirable company because of the volume and the pattern of the weekly chart. So this is my entry here, second entry here. My entry is an average of 11.26. I have a quarter position. My initial stop was at 8.70. I had a target of 15 plus. I recently raised my stop up under here to 13.50. Price is up 87% from my entry, and I have no reason to sell. Okay? Again, here was a new 52-week high. Price is again approaching that area of making another new 52-week high. There's no reason to sell. So we had another move up in earnings right here, May on high volume. After this event, volume goes down and price goes up. You guys see that? How volume is going down after this contraction in price and price is going up. Do you see that? It's like there's just no resistance to the price going up. Demand, which tells me there's demand. Also during this move up, we are making new 52-week highs. Every breakout over an area is a new high. And that's, this was a new high. This was a new high. These candles here were new highs. So this is a bullish indication. Remember, in this case, I only have a quarter position. So I don't have any shares to sell into strength. But I will hold for larger potential gains and raise my stop. Again, this is a free ride. I have an entry at 11.26. My stop is up at 13.50 and the stock closed at 21.13. So I have a free ride. There's very little stress, very little risk in this trade. So if you have a big winner over a long period of time, then that stock can take over your portfolio as a large percentage of your holdings. This is something to watch out for. Okay, so for example, if you bought Amazon stock 10 years ago, and at the time it was 5% of your portfolio, now it has grown to be 50% of your portfolio. It would be prudent or wise to sell some of your positions down to reduce your exposure and risk to a decline in Amazon stock. When you do this, you would sell Amazon and move the money into another stock or diversifying into other names. These, again, are the reasons that investors sell. To reduce exposure to any one stock that has grown quickly, to take profits and invest in another company or fund, if there's forward guidance or a forward decline in earnings or sales or any sort of decline in company performance, and finally, any technical reason like a price or chart showing extended price to the upside and or large wide range bars, indicating the possible end of a move. Okay, so do you guys see any really wide range bars on this chart? I don't, other than this one where it made this high, as far as an indication that price is not going to continue higher. On the weekly chart, we don't see this size of a bar this time. These bars are getting a little bit wide, but they're not small like these, but it just seems like this stock wants to go higher. And so we'll just continue to raise our stop as a protection to ourselves to protect profits. Here's an example of a stock I just pulled up showing a stock that was making new highs during this period between August of 23 and December of 24. So this stock was in a nice uptrend until December 24. Recently, prices recovered after the sell-off into a range right here and broke out of that range this week right up here. The negative is that I broke out into supplier resistance from last year. So this area would be considered an area of supply or resistance because it sold off here once, made a double top, and sold off again in that area. But right now it looks like this stock is following the market higher. And if it breaks through that area, that would be a great sign for Ryder Company's symbol R. Just an example. So here is a more detailed view of that same company. Here on the left, you can see price in a much wider, more volatile range, right? Not a great area to trade. Can you see this, how this is sold off? Then we had a wide range bar, came back up, sold off again, some more wide range bars, sold off again, and finally, it took a month or two, but it finally kind of calmed down over here on the right side of the chart. So this is just an example of by waiting for price to contract or settle down or become less volatile, we can look for a better, lower risk entry point to take advantage of the next move up. and we had a breakout on the last day to the right. So this, you can see price clearly was wide and crazy over here, and all of a sudden it tightened up in this range, much tighter range. And now on this last day, we had a breakout over that range. So that indicates to me that buyers are starting to really take control of the price action in this company. Again, not necessarily a trade suggestion or a trade idea, but I just want you guys to get the concept of looking at price, looking for clues as to a more advantageous entry for yourselves. Okay, here is a company, Stone Co, symbol STNE. I do currently have a position in this company, but as a price detective from left to right, you can see a positive reaction to earnings here. We had two gap down reversal candles right here, gap down reversal, and then another gap down reversal. That's a powerful signal that buyers are starting to take control. Then in this area, we had 5 relatively small bars right here, followed by a gap up and a close higher bar. So this would have been a new 52-week high on that bar. And with if we look at volume contracted before this happened. Before this gap up, look at volume contract. Volume expanded and price expanded again. So that was a powerful area to get involved in this company. Another positive earnings report here. Positive earnings reaction followed by a demand bar with a bottoming tail. So I call these bottoming tail bars demand bars. And then we had here another gap down. So if you read this properly, this red candle would have been a gap down, closed down. And then the next day it opened here and closed here. And the next day it price gap down to start the day and then closed up, leaving a green candle followed by this nice tight area of price. Okay. So then later on down here, we had another gap down reversal 10 days later, which would have been right here. So from here to here, 10 days later, we have this gap down reversal bar. This demand bar with a bottoming tail. And then we had this other confirmation of that buyers are still in control, okay? Then over here, we had a nice 3-bar turn followed by tighter pricing, followed by a wide range expansion bar. Again, this bar would have been a new 52-week high on a closing basis. When we put all of these clues together, we get a picture of buying or demand for the stock. And again, at the end of the chart, we're closing this day and this week with a new high in price. So this is a stock that's under accumulation. It has demand. Buyers are willing to pay more and more for shares of this company. So this is that would be an idea. I like that idea there. Here's another idea for you. Just something I picked out of my search list. American Public Education, symbol APEI. Okay. So this is a 2-year weekly chart. Each candle would be a week, and you just see from left to right, price didn't really do much over this period of time until it started to move up here. April of this year, March and April of this year. But before that, it was pretty small candles. We had some earnings come out, and that created some volatility there, but then price settled down again. One interesting thing on this chart is right here. We had this red candle, and then the next weekly candle was actually gap down reversal, and then price tightened up again. So that was one clue that demand was coming for the stock. Here's another situation here. We had 4 weeks in a row of very tight pricing and then a gap down reversal, and then prices from there just kind of took off. Okay, so notice over here a lack of interest in flat pricing or consolidation for about 6 months. Look to the left over here. Okay, and then on the right side we have a picture of demand showing a new 52-week high on a weekly chart with increasing volume. Look at this volume here is low, and then volume increased and price went up in value. So that shows more interest in this company. We also have right here a nice 3-bar turn over the last 3 weeks. So we had price moved up. We had this small candle here called a doji candle. Then we had some selling, some more selling, and then a bottoming tail bar, even though it's red. and then we had a gap up and close higher for the week, making a new 52-week high. So that's again showing a picture of demand and interest. I hope I was able to make some very clear points for you this month and this week as to what I'm looking for as an advantageous entry. Again, if you have any questions, I'm here for you guys. If you need help, laptoptraderphil@gmail.com. Again, I hope you have a happy 4th of July, and we will see you next month. Bye.